What do you think about the action we're seeing in the futures? Before it was kind of mixed. Now we're seeing all three firmly in the green.
Well, Frank, I think it's like returning a Christmas gift after the holiday. Markets seem to have been taking back the Santa Claus rally on signs of a later start to rate cuts from policymakers and from the economic data. But we're soon going to enter the quiet period ahead of the next Fed meeting, so markets could be stabilizing and refocus on earnings, which are generally solid so far.
All right, so you're actually focused on things outside of the U.S. and the U.S. futures. You're actually looking at something I don't think we pay a lot of attention to it here at CNBC. Japan CPI. It's going to come out later today. Why do you think that's so important for investors?
I think it's the most important piece of economic data today. And that's because Japan's CPI for December is going to be the last key data point ahead of the January 23rd Bank of Japan meeting, where there's a chance of a rate hike for the first time in 17 years. A hotter than expected reading could boost Japanese assets and the currency because any rate hikes over the next year hold the potential to prompt Japanese investors to sell foreign stocks and bonds, including 1.1 trillion in treasuries, and bring them home, boosting Japanese assets at the expense of markets elsewhere.
Yeah, by the way, your WEX word of the day today is Japan. I kind of jumped the gun on you there, Jeff. We're also showing the audience, these aren't your picks, but they're ETFs that are exposed to Japan that you say could potentially benefit from a CPI reading and that decision by the central bank. Also want to look at something that we were talking about earlier in the show, the supply chain. So you're looking at container rates specifically from China and Asia to the U.S. West Coast. Now, that lane not impacted by the Red Sea disputes at all, but the prices have increased pretty significantly year over year. So give me a sense. Why do you think that's so important to U.S. investors?
Well, inflation is such a hot topic right now, particularly with central banks debating when they're going to start rate cuts. Container shipping prices are now poised to rise above their year-ago level. They've been falling for over 2 years. So this would be the first time since the peak of the supply chain problems 2 years ago that we're seeing rising prices on a year-over-year basis. Those choke points at the Panama Canal and the Red Sea are starting to impact supply chains, even those that don't go through the Panama Canal or the Red Sea. For example, the most popular route, Shanghai to LA, those prices are up 40% to ship a container from Shanghai to LA. So as that continues to feed in across the cost structure, we could see maybe more pushback on the expectations for Fed rate cuts. That could be bad news for stock valuations, especially those that thrive on a flood of market liquidity like the Magnificent Seven.
Okay, so you're worried about the inflationary impact of the supply chain, which makes sense. That's largely the reason for a lot of the inflation that we saw during the pandemic. But we had a guest on earlier that believes that some of it's going to ease at least after Lunar New Year, when seasonally there is this uptick that you're talking about. If we get past this point and those rates on the supply chain, if they continue to go back down, does that change your view about the impact of the supply chain on Fed decisions?
Yeah, right now it's just a risk. It's not the base case. And I think there's another thing peaking. That's the El Nino. That's been a big part of why the Panama Canal has been so backed up. Just no rainfall there. That's continued to be restricted through February. But if we get past that peak in El Nino and weather patterns begin to reestablish their normal patterns, yeah, we could see some of those concerns begin to ease.
All right, coming up today ahead, you're looking at Japan CPI. Anything else you think investors should be paying close attention to? Of course, we're also having a number of regional banks reporting as well.
Yeah, watching those bank earnings are important because remember, some of them are more exposed to some of the commercial lending issues than others, particularly into real estate and development. That's really important, knowing that's still a weak part for the entire bank structure, not only in the U.S., but around the world.